So thank you, everyone. Welcome to Webinar Wednesdays. I am Melissa Pomeroy from the CCUA, and really looking forward to to this series that we're able to put on, but also in particular to this particular session that we're going to share with you today. So very happy to introduce to you Rhian Horgan, who is the CEO and founder of Silvur, and Stef, who is the VP of Partnerships. I have been working with Silvur. I've gotten to know Rhian and her product and her solution over the past few years. And for those of you that are not familiar with Silvur, essentially Silvur is an app that really helps credit unions help their members navigate retirement decisions. And there are a lot of statistics that have been kind of flying around out there lately, and I know Rhian loves statistics, and there are a few I think that are pretty captive, and I think pretty relevant to what the credit unions are trying to do in terms of serving their memberships and where an opportunity really does lie. And so one of the things I think right off the bat, Rhian, that we've said is 100% of your members will retire at some point, and 99% of members enroll in Social Security and Medicare. Yet credit unions, however, are currently capturing less than 20% of retirement direct deposits and less than 1% of the Medicare opportunity. Members who do retire and who collect Social Security are looking for help not only navigating that, but also help with what to do with their funds from Social Security. And there's a lot that has been going on recently that has really, I think, raised this to the kind of to the forefront in terms of what credit unions can do and the opportunity that they're really faced with in terms of capturing a larger share of this wealth. So very excited about Silvur, very excited about this opportunity. Rhian and Stef, I know you've been getting some great traction recently with credit unions, and it's really good to see this is a relevant topic, and this is something that there's not a lot of this in the fintech world. There's not a lot of this that's been introduced to credit unions. So I know I, for one, am very happy that this is taking off, and looking forward to seeing our members as well. So I'm happy that you're here to share this with them. And with that, I will pass it off to the two of you. Thanks for being here, and looking forward to the discussion.
Hi, Melissa, and thanks so much for hosting us this morning. As Melissa said, my name is Rhian Horgan. I'm the founder and CEO of Silvur. I thought I'd just quickly tell you why I started Silvur, and then I'll give Steph an opportunity to introduce herself also before we kick off. So prior to founding Silvur, I worked for JP Chase for about 18 years. Because I had worked in financial services for so long, when my parents got ready to retire, they went to their one child who worked in financial services to ask all of their questions. And even though I had worked in asset and wealth management at JP for a long time, embarrassingly, I wasn't able to answer their questions. They started asking me questions around Social Security. Just as an example, my parents had immigrated to the States in the mid-'80s when we were kids. And my mom had not worked outside the home since they had immigrated to the States. And so she and my dad knew that she did not have her own working benefits for Social Security, but that she was eligible for spousal benefits. But when we logged on to Social Security, what we saw was that her account was empty. And that's because the Social Security website only shows you your worker benefits. It doesn't show any of your spousal, ex-spousal, survivor benefits. So we did what your members actually do, which is we went to Dr. Google and tried to find answers. And frankly, we're super confused by the information that was out there. So confused that I ended up buying a 370-page book on Social Security. And I thought to myself, this is crazy. All of us on this phone today have Social Security taxes taken out of our paychecks every 2 weeks. So really easy to auto debit those taxes out of our paycheck, but way too complicated to actually get those benefits when you get ready to retire. If I thought Social Security was complicated, Medicare took it to a whole nother level. My parents, like many couples, were not born on the same date, so they weren't enrolling in Medicare at the same time. In fact, because my parents had a 5-year age difference, when my dad enrolled in Medicare and left his employer plan, my mom lost her employer plan coverage and needed to look at ACA and COBRA. So Medicare complicated enough, but all at once my parents were navigating COBRA, ACA, and Medicare at the same time. My experience helping my parents navigate retirement was really the inspiration for Silver. What I learned through my parents was that for most Americans, the biggest decisions they make are around their Social Security and Medicare elections. But it's a space where there, frankly, isn't a lot of advice out there. And so we're going to talk a lot today about how we support your members through these big decisions that every single one of them make, and how by serving your members, we can help you also grow your share of the retirement wallet. Steph, over to you.
Thank you, Rhian, and thanks so much, Melissa, for teeing us up and the introduction. I think that was very, very well said, and that's part of the big reason why I joined the Silver team. You know, the need that we have in the credit union space is there to really focus on this membership, and the opportunity that comes along with it is tremendous. I am the VP of Partnerships for Silver. I've been working with and within credit unions for the last 15 years. I started as a teller, fell in love with the industry and the movement and what we do here. I spent about 10 years working with different credit unions in the Midwest and the West, mainly on the lending side. Saw an opportunity on the data and analytics side to do a couple of years of that. And then working with Silver, it's just this perfect combination of everything that I had seen before. And again, the opportunity that I see in the space. So I'll turn it back over to Rhian as we get into the details. But I just wanted to mention I'll be here to support. So if you have any questions, please feel free to chat them in throughout the session today. I'll be sure to keep an eye on that. And then I will also share the contact information at the end. So if you do want to continue any discussions after our meeting today, please feel free to reach out.
Great stuff. All right, well, let's kick off. So I imagine those of you that have joined us today are very familiar. Steph, if we go to the next slide, you're very familiar with kind of what the deposit base looks like at the credit union. And I think when we speak with credit unions, what we hear is that their members over the age of 50 are the largest depositors at the credit union. So very important group of members to keep that kind of a lending and deposit kind of balance in check. Americans over 50 own over 80% of household wealth in America. So they're not only really important depositors for you all, but they are some of the most kind of valued customers of the financial services industries because of the amount of wealth that they control. So I think one thing to think about as we go through this is that, you know, you have these members, a lot of loyalty already, but a lot of folks are going to be targeting them over the coming years to really try to consolidate balance sheets with different financial institutions. So if we think about this from the member perspective, I think one of the things that's really interesting for me when I speak with credit unions is, you know, the deep commitment that credit unions have to financial wellness. I would say that when we look at what most credit unions are offering to their members, it really is focused on the earlier years of life. And I would just say that a lot of tremendous work has been done around helping folks learn the foundation of their finances, learning how to you know, establish a good FICO, learn how to smart borrow, and then ultimately start to save. But the challenge that we see for your members that are over the age of 50 is that a lot of the work that you've done to support them in their 20s and 30s may not actually be super relevant once they get into their 50s. And I'll just give you one case in point, which is the FICO score. So you likely are spending a lot of time you know, really trying to help your members understand what their FICO score is and making sure that it's correct and helping them understand, you know, what they can do to smartly improve it. But whether your FICO is 650 or 750 does not help you understand whether you've saved enough to retire. So all of a sudden, your members get into their 50s and there's a new set of decisions that they have to make. And I would just say that today, most credit unions that we talk to have focused almost entirely on educating members below the age of 50, probably with the assumption that you've done so much work that they must be okay by the time they turn 50. And what we would say is maybe, but there's actually a huge new set of decisions that they need guidance from you to navigate as they enter into Social Security or as they enter into retirement. So let's talk a little bit about what's on your members' minds as they navigate retirement. The first thing I would just say to you is that members are deeply fearful of running out of savings in retirement. You need to remember that this is the first generation of Americans that are retiring en masse without a pension. So these members have had to self-save, and now they have to figure out, do they save enough and how do they spend down those savings in retirement? So making their savings last in retirement is the number one goal. One thing I would just flag for you all, particularly for those of you that have investment services teams, is that oftentimes we associate the word retirement with wealth management. And it's really interesting when you look at this chart of where members need help on their retirement, that actually investment advice is the last choice that folks are picking. And so I would just encourage us all to think about that retirement isn't necessarily from a messaging perspective about money management and investment advice. It's actually at much higher level concerns that members have, which is like, have I saved enough? Will my savings last a lifetime? So let's go to the next slide. I think when you look at your membership, one of the things that I think we're all very cognizant of is that a lot of folks, within the credit union, haven't saved a huge amount of money. And so again, a lot of times we talk about investment guidance as kind of the big blocker. I would actually say it's less about investment guidance and more about folks not even knowing how to save. So when we ask folks who are earning less than $100,000 a year as a household what their concerns are for retirement security, it's typically that they are concerned they're not earning enough money to save, and they're also not sure how to grow their savings. Again, I want to just double tap on the word investments and say that sometimes the word investments or wealth management or investment guidance is sending signals that actually don't really feel like it resonates with the member. They're not sure how to grow their savings. And that is something that I think is kind of foundational to where credit unions can step in and support them. For the last, as Melissa mentioned earlier, we've been fortunate to work with some, I would call them early adopters in the credit union space for the last 2 years. And that has given us the ability to put together a data set to help us understand what's going on from kind of a financial security perspective for members. And I think one of the things that's really obvious to us when we look at the data set is that there's a lot of inequity in the system. And so you're going to have a cohort of members who've actually saved and feel like they're really prepared for retirement. But there are definitely segments that are more at risk. And I would say the risk is for these segments that they're going to age into poverty. So the first cohort I would just flag is your female members. Most folks on the line probably know that women tend to live longer than men. But we also know that women historically have had lower earnings and lower savings. And so when you think about that added longevity plus the lower savings and retirement income, what you see is that their savings last 9 years less than men. So your female members have a disproportionate risk of aging into poverty. The second thing is that we see significant racial inequities when it comes to retirement. Years of lower earnings and lower savings results in particular, Hispanic and African American members being significantly more at risk in retirement. This not only plays into their savings balances, but it also plays into their Social Security. As an example, Hispanic Americans have a 40% lower Social Security benefit every month than Caucasian Americans. So again, as we think about guiding members through retirement, we really have to think about these different cohorts. What are the areas of support that they need? And again, I would just double tap on, particularly for your at-risk members, messaging around investments and optimizing taxes and IRA rollovers may not actually be the messages that resonate with them. So where do members need help? So the first thing to think about is Social Security. For your members, Social Security is their largest retirement asset. The average Social Security benefit in America is $2,000 a month. That benefit adds up to $500,000 over the course of retirement. Today, there's a lot of anxiety around Social Security. It is projected not to be fully funded by 2035. And what we hear in Washington today is that there are likely going to be big changes to Social Security this year. We've already seen the elimination of the WEP and the GPO. For those of you that are not familiar with those were rules that limited the amount of Social Security that public servants and teachers could receive. In states like Massachusetts, the elimination of the WEP and the GPO are going to result in massive deposits that are going to be made to financial institutions starting next month. So if there's anyone from the state of Massachusetts on the line today, let us, to send us a note, because this is a place where, to be honest, your members could be receiving $15,000 to $20,000 lump sum deposits next month, and they could start receiving Social Security for the first time. But that's not all that's happening. There are proposals to eliminate state and federal taxation of Social Security, which might be a good thing for members, but probably the negative thing for members is that we're likely going to see a delay in the full retirement age, which means that benefits will be reduced. All of this means a lot of uncertainty, and this is where Silvur comes in to really help members navigate these changes and make sure they understand what's happening. On the Medicare side, pretty much every one of your members is going to enroll in Medicare when they retire. And you might be thinking, Medicare, that's healthcare. Why are we talking about it? Well, we're talking about it because the average couple in retirement will spend over $300,000 on healthcare. And by the way, that assumes you don't spend any time in a nursing home. That's just your ongoing healthcare costs during retirement. So health is wealth. Your members are very stressed by understanding how much they can afford to pay, what's actually going to be covered by their insurance policies, what's going to be out of pocket. And this is where, again, guiding members through their big decisions around Medicare can be a significant opportunity for credit unions to really lead with advice and guidance and support your members. I'm going to maybe just end with kind of me taking a little bit of a zoom out, which is we just talked a lot about Social Security and Medicare. And I would just say to you that the organization that talks to your members all day long about Social Security and Medicare is AARP. And if there's any marketers on the phone today, my guess is that you don't think about AARP as your competition. But I would tell you, you should be thinking about them as your competition. Starting at age 50, your members receive a membership card from AARP. And for the next 15 years, they tell your members that they are fighting for them, that they're advocating for solvency for Social Security, that they are fighting for drug costs to be reduced on Medicare. And after 15 years, they go in for the kill and they sell them their Medicare policy. They generate $1 billion a year in commissions from selling one Medicare policy, which is the United Healthcare Medicare policy. And when they're done selling your members the Medicare policy, they cross-sell them deposits, CDs, annuities. If you're not thinking about them as your competition, you are handing the retirement wallet to the AARP. And what I would just say to you all is AARP is winning because they're buying trust. You are all already have trust. The question is, are you talking to members about the topics that they really care about in this phase of life? All right, Steph, I'm going to pass it over to you to do the next section.
Great. Thank you so much, Rhian. So we talked about the member perspective and some of the challenges that they're seeing, and we wanted to bring it down now to really honing in on the retirement wallet and what does that mean for credit unions? Of course, knowing that you're there for your members, you're educating them, you're helping them navigate all the complexities and the anxieties, especially right now that are coming with retirement. What does that mean to the credit union and how could that impact you? So just to level set, kind of going back to the overall opportunity, you'll likely hear us say it's a $70 trillion opportunity. And what that means is if you think about the Social Security payments, so that's the direct deposit that is maintaining those member relationships when they switch from a W-2 to their Social Security direct deposit. And some of you may know that they're no longer paper checks. The members do have to get that direct deposited, and they need to think of that financial institution pretty much in a moment's notice when they're electing Social Security. So how do we get the credit union to be top of mind when they're making that transition? If you look at IRA rollovers, those are projected to be $765 billion annually. So what we like to talk about is, we look a lot at what money is leaving the credit union, but it's hard to know what money is moving when it's not with the credit union. So if you have members that are in this retirement age of 50 to 70 and you're not seeing the deposits or the investments that they have with the credit union triple, even quadruple, that likely means that the credit union was not the financial institution that was selected to be the consolidated PFI as those members are moving along in their retirement journey. There's 53 million Americans enrolled in Medicare. Rhian touched on AARP and how they're maximizing that wedge in through trust and loyalty and advocacy for members and how they're starting at age 50. And 2/3 of American homes are owned by boomers. I think the stat is there's about 10,000 boomers retiring every hour today. So there's a tremendous opportunity if you look at helping those members, but also the ways that they can navigate and structure their income during retirement. So as we talk to partners and working with credit unions and digging into the data is really fascinating to see. 98% of wealth is not held at the credit union. So if you look at the average deposit of $14,000, the average member balance sheet, especially for partners that are working with us on the Silver side, we can see members' balance sheet data that they enter into the system in order to get their retirement score, which tells them how long their money will last in retirement. And that average balance sheet is $952,000. So a tremendous difference between what the credit union has on deposit. And less than 2% of members are typically served by the wealth management teams. So as Rhian mentioned early on, we do a really great job of thinking about education when it comes to younger members, when they're thinking about borrowing, when they're thinking about building their savings. When it comes to retirement, as we've talked with many credit unions, there certainly are different education courses and classes available. But a lot of times we think about our wealth management or advisors kind of checking the box of serving members in retirement. But the challenge is that only 2 to 3% of members are typically working with a credit union's wealth management team. And that could be for a number of reasons, but a lot of that is likely because when you use the word wealth or investments, many members will essentially self-select out and think, hey, I don't have a lot to invest, or I'm not wealthy. And so they likely aren't going to see that team of people, even though we know it's a bit different in the credit union space, that we would help and talk to them. So how do we expand that to really broaden the funnel and align with where members' heads are at, which are just navigating Social Security, Medicare, some of those decisions, and trying to figure out, when can I retire? When can I elect that? Instead of thinking about some of those optimization strategies that are a little bit further on, or a lot of times not even in the scope of many of the members that we serve. So Rhian touched on this before, Social Security is really members' largest retirement asset. It is an annuity payment, so to speak. So I think a lot of times we don't think about it as the lump sum, but if you go back to the average benefit being $2,000 a month over the course of 25 years, for an average member, that's about $500,000. If you have a couple and one of the spouses are not working, then that's what you see here, about $787,000. If you have a 2-income household retiring, that's closer to $1 million. If you compare that to the average home equity of about $450,000 and the average 401k balance of roughly $250,000, that's a tremendous amount of money that we're talking about. And again, it's not coming necessarily as a lump sum, but it is that 25-year relationship of ongoing direct deposits that can, again, start to open that retirement wallet to the rest of the relationship with the member for the credit union. So I talked about this a little bit before, but I just wanted to hone in on the idea that there's multiple wealth transfer events. So I think when a lot of us talk about wealth transfer, think about it, we're thinking about the end of life transfer to heirs. And that definitely supports a lot of our focus on younger members, right? And starting to build that household relationship. But there's actually 2 primary events that happen before that final wealth transfer. So the first one you see here is that consolidation of accounts among favored financial institutions. On average, members, when they get to be about 50, have 7 to 8 different financial institution relationships. So as they start to think about simplifying their life, getting their arms wrapped around everything that they have and start to plan for retirement, one of the first things they want to do is make that simpler. In retirement, they'd rather be out golfing or enjoying life, fishing, instead of thinking about where their money is at and trying to navigate logging into accounts. So again, if in that retirement age of that 50 to 70, if you aren't seeing your accounts with that member tripling, then that money is likely not coming to the credit union. The next thing that can happen is the death of a spouse. So when members are working with your financial advisor or wealth management team, as an example, a lot of times there is a primary partner of the household that's working with that advisor. And as Rhian mentioned before, a lot of times women will live longer than men. And what we've seen is that 80% of women will fire their financial advisor when their spouse dies. And what that indicates to us is that there was not that whole household relationship. So they might have split the responsibility with finances, or maybe that partner didn't get pulled into those conversations or select that financial advisor. So there's tremendous risk if you just have one of the partners as your primary point of contact. But really, retirement is a decision for both parties. And so having a tool or resource and education that can help both partners navigate, it starts to expand your relationship to the entire household and protect that going forward. And then we get to that final end of life transfer to heirs. And a lot of times, if there's anyone who's a caregiver on the phone, there are the younger members, and it tends to even be more folks in their 50s, not those in 20s and 30s, who step in as caregivers for their parents. And if they see that their parents have a resource like this, it can be a moment of delight to help them navigate it versus a moment of anxiety that then expands generationally. So I'll turn it back over to Rhian to talk a little bit about the design for this specific member demographic and how we can best support them in their retirement journey.
All right, thanks, Steph. So I want to talk a little bit about what the retirement journey looks like, because there's a lot of jobs to be done. And I will tell you that as a young tech company, one of the things we do is a lot of testing and learning to really think about, like, how do we deliver an experience that matches the member journey. So in the early days of Silvur, we wanted to make things really simple for members, and we actually created what we called a retirement roadmap. And it was a very simple checklist of 6 to 8 things to get done. And we felt like once you got through those 6 to 8 things, that you really had nailed your retirement and you were ready to go. And so this is just like a simple picture of, like, here are the things you need to get done, and let's, like, help you progress through it. Well, we learned pretty quickly that we were wrong, and it wasn't as simple as this. What we learned, if we take a look at the next slide, is that retirement, first of all, does not get tied up in a bow on one weekend. It is a 10 to 15-year journey where members are starting to learn a little bit about retirement, trying to understand when they might conceptually retire. And then they're starting to spend some time moving from conceptual to, okay, I'm less than 3 to 5 years away from retirement. How do I actually start to kind of put the pieces in place? What starts to happen, however, is that life intervenes. And whether it's a member losing their job or getting divorced or a spouse dying, all of a sudden, all the plans that they've put in place, they almost have to restart. So there is this, like, cycling and kind of reevaluation that goes on with retirement, which turns retirement into a much more complex journey where folks are always needing to kind of check back in and see whether the assumptions that they made still make sense. Additionally, the government is changing the rules all the time. So it might be that you have all of your plans in place, and all of a sudden you learn that, like, the tax rates are changing, or that the full retirement age is changing. And all of a sudden those hard-earned plans that you'd spent a lot of time on don't make as much sense anymore. This is why you have to create an experience for members that they can stay with for a long time, because it isn't about reading one blog this weekend and being done. It's actually about creating a journey that members can continue to connect with as their life and their plans evolve. As we think about the retirement journey, one of the things that's super interesting is that members are at different phases of the journey, online and offline. So they start their journey online. They do a lot of research today with Dr. Google, where they go to the internet. They spend a lot of time trying to understand the decisions that they have to make. And by the way, as they do that, they're bombarded with ads, and God forbid they add their email address or a phone number to a website, they're going to be getting lots of phone calls coming in. As they go down the learning journey, they then start to talk to family and friends. And sorry, Steph, if we can go back to that page still. They go back to family and friends. A lot of retirement is social. You just think about yourselves. You're probably going to retire around the same age as your friends, right? Or you have family members. Maybe you've got a brother or sister that's a couple years ahead of you, and they figured out Medicare or they figured out Social Security, and you're going to pick their brain. But when it comes to making big decisions, oftentimes members want to make the big decisions in person. And that's because these are decisions that they've never made before, that they often only get one chance to make, and they want to be secure and confident about making their decisions. There have been a lot of technology companies that have tried to create an entirely digital experience. And what they have found is that members will do their research online, but they want to talk to a human before they actually make the final decision. What's interesting here is this perfectly sets up a credit union because you can provide the digital guidance, and you can also provide that in-person human support to help members make decisions. So when we think about designing for this journey, we think about creating an experience that members can keep logging back into. I think a lot of credit unions we talked to today spend a good amount of time trying to create blog content to support their members. And what I would just say to you is that blogs are part of the equation, but the challenge is when members are on a multi-year journey, blogs don't actually provide them the information that they need to support them over a 10-year journey. Oftentimes your blogs are being refreshed, and so a year later when a member wants to, like, refresh their memory, they can't actually find the blog that they were reading a year ago. So when we think about delivering an experience to members, what we think about is delivering a logged in experience that members can keep coming back to, that grows with them, that knows if they're 10 years away from retirement, that they'll need some high level information. But if they're 3 years away from electing Medicare, they're going to want to go deeper. We also know that retirement is personal and that generic blogs don't actually answer the questions. Generic blogs, I would say, scratch the surface, but they don't provide the details that members are interested in. When your member comes in and tells us that she's a divorced woman who wants to retire at 62, we already know enough about her to be like, we're not going to give you a generic understanding of Social Security. We're going to help you understand divorce benefits for Social Security because that's what people like you are interested in. We also know that if you want to elect or if you want to retire at 62, that you won't be eligible for Medicare. And so actually what we need to teach you about is COBRA and ACA. We also know that when you see how expensive COBRA and ACA are, that you're actually going to start thinking about working part-time. And so we're going to feed you content to help you understand what part-time work in retirement can look like. So really understanding how long this journey is I think super important to figuring out how you design the experience. It also creates that opportunity for the credit union to have multiple touch points along the way. So let's talk a little bit about how Silvur helps your members. We really think about being retirement all in one place for members. When we do user research, what members tell us is they have to go to lots of different places to find the information they need to navigate retirement. And so we've really tried to create this one-stop shop for members where they can get everything that they need around retirement. If I was to tell you the one thing that truly is the major differentiator, like that first moment of delight for members, it's actually the inclusion of healthcare information. They say to us, look, I can find Social Security calculators. I can find information about Roth conversions, but everyone avoids talking about healthcare. And it's actually that big budget item that I don't know how to tackle. So retirement all in one place. We want members not to have to go to 20 different places to find the information. We want to find one place that we can provide them both education, tools, and calculators that help them navigate retirement. To provide them the answers they need around retirement, we have to collect a lot of data from them around who they are, what their goals are, and how much they've saved in retirement. The two most important pieces of data that we collect is understanding when members want to retire and when they want to elect Social Security. It powers the calculators and helps them understand, will they be okay? But importantly, it also helps us identify when members are going to be moving money. And with that, let me pass it back to Stef to talk about why that matters to you.
Awesome. Thanks so much, Rhian. So as Rhian mentioned, those money movement indicators are really key so that you can deliver personalized outreach and offer that support and help for members along their journey. And at the same time, that opens the opportunity for you to offer different products and services that could, of course, support them on their way to retirement. And so if we think about some of the components that Rhian had mentioned, that personalized education is meant to empower your members to make informed decisions about retirement. And if you're there for that support along the way, become that go-to resource for them. It prevents them from going to Dr. Google or starting to read more about that AARP and helps protect that relationship. As part of the member navigating the journey, developing their retirement score to see how long money will last, as Rhian touched on, they share a ton of data. And in fact, they're quite motivated to share all of it and to share very accurate information because that gives them a more accurate score and allows them to see how long will my money last and maybe what are some different things I need to think about doing to ensure that it lasts long enough for me. And we had historically used that information to deliver a more personalized experience to the member. For example, knowing that it's a divorced woman and she wants to retire at 62, and what are the things that might be top of mind for her. On the flip side, in working with credit unions, we realized that a lot of the information we were collecting was actually not information that they had readily accessible about their members. And I think the thing I like to liken it to, coming from the lending world, is we don't have a credit bureau for deposits. It sure would be nice, but this is darn near the closest thing that members will report where they have all of their different account information, what home equity they have. So it really helps to gather a ton of information that you don't have. And we feed that back to our credit union partners in a really easy way so that they can see who are our members that are close to retirement or reporting that they're close to retirement, who are reporting that they're close to electing Social Security, maybe those that have $1 million in assets or 500,000 or 250,000. So you can start to think about what type of outreach you would want to do to those for those members and how you can expand, again, your share of that retirement wallet with them. And then the last piece is on the Medicare side. We talked about Social Security being that 25-year direct deposit stream and really securing that relationship with the member. On Medicare, we have started standing up a Medicare insurance offering. We started in the state of Michigan. We're now expanding into Oregon and Washington and partnering with credit unions to be able to offer Medicare to the members. And what that opens up on the credit union side is a 25-year source of non-interest income. And what we're finding, especially with those Medicare appointments, as Rhian touched on, members might start to, research online, but they actually really want to come in and talk to someone because Medicare is so complex. And as part of that consultation and that meeting, those Medicare agents actually gather a ton of additional information about the member. And a lot of times members are very open about it because it's not a financial advisor. It's not a sit down meeting thinking about finances, but we need to understand what that looks like as we're putting together the Medicare insurance. And so they'll share a ton about, again, their assets and their goals. And so with our partners in Michigan, as an example, we're uncovering tons of balance sheet opportunity and referring that back to their financial advisor team, as well as referring that back to the branches. So to bring this home and think about where you can get started, we've shared some examples again of how we've rolled this up into Silvur as that one-stop shop. Of course, we would love to partner with you on that, but if you want to think about how you could get started today with the resources that you have at the credit union, the key is to start with education. As we mentioned, that funnel, if you think about the member journey, really starts with that online research. And the credit union, of course, has courses, has blogs, as Rhian touched on, but providing that education is going to be key, and thinking about how you can really maximize that and make sure you're expanding reach to members and letting them know that you are a resource for them as they're navigating that retirement journey. So again, they aren't going to Dr. Google, aren't getting a 370-page book, or leaning into AARP emails that are constantly in their inbox. At the same time, that allows you to continue to build that trust and loyalty to strengthen your position as the financial institution when they move into asset consolidation. Rhian also mentioned that the next step in the funnel is a lot of times members going to their friends or family. And I think that's really unique in that they do want to talk about this with friends and family. I think talking about money has become less taboo, but especially with this cohort, they want to talk to each other about what they're learning, what they're finding. And if they have a friend that says, hey, I'm working with the credit union and they shared a ton of information, they will share that with their friends and that will start to bring in more. So again, leveraging that top of funnel where they're having those conversations of being a resource will continue to spread. The next step in the member journey is kind of poking their head out for the webinars and seminars. So if you were to offer different kind of in-person resources where members would actually be coming forward, maybe sharing their name, letting you know who they are, coming in person, that is the next level in the funnel where they're getting a little bit more serious about thinking about their retirement journey and wanting to get some more specific information for themselves. So that would be another way to get those members to continue to move down and to, again, look to your credit union as that resource as they're going deeper on topics. And then the last part in the journey would be meeting with advisors. We could say that it's financial advisors. I know a lot of credit unions have different advisors that are not so much on the wealth management side, but maybe help members at a branch level and look at their entire financial picture and can help provide guidance that way. So we don't mean to formalize it with advisors. Of course, that is one option. But if you even have branch staff that you could leverage, that could help sit down and talk to those members. The key opportunity with that is really getting into some of that goal and money movement indicator information. You can't really tell, because retirement is so personal, exactly when a member is going to retire, exactly when they're going to navigate Social Security. So if you have resources for members to meet with and start to get personal, you can uncover some of that information through those conversations and start to think about how, when members are nearing retirement or nearing that change to switch over to Social Security direct deposit, how you could make sure that your credit union's information is in hand when they're setting that up. So again, they think of you as their primary financial institution for that. Through all of this journey, you'll see on the left-hand side the product and service offers. As you continue to build trust and show that you're there from an educational perspective, that really earns you the opportunity to, of course, let members know how you can help them from product and service offerings. As Rhian mentioned before, when members are doing research, they are constantly getting bombarded with products and services and having people trying to sell them before they provide that immediate need of education that they're looking for. But certainly that can be an undercurrent through this entire funnel. And the more that you know about the member, the more aligned your product and service offerings can be. So if you do have any sort of marketing engines that provide more personalized or segmented offers, a lot of credit unions we work with have personas built out. You could use that to drive some of the offerings and think about how, again, you can make that really personalized for members in that journey. So wanted to give you an idea again of how we have pulled it all together. But as you go back to your offices today or to your next meeting, wanted to share some ideas of how you can get started right away. And of course, we would love to keep the conversation going with you on how you can support the 99% of members who retire. We exist to help empower the credit unions that do that, and would love to continue brainstorming and talking about ways that we can support those members. So as mentioned before, I have my contact information included here. So we'd love to hear from you. I think we have some time left. So if we're open to it, Melissa, we could open it up for some Q&A.
Yeah, absolutely. And thank you both very much for that information and the conversation. And we do have time for questions. If anyone would like to throw some into the chat, that would be great. But I'm happy to kick us off. I always have questions I could ask. So, I just to kind of maybe build on what I had mentioned when we started, that I think as the years go by, this is becoming a growing, I hate to say, problem, because I think it really is an opportunity for credit unions. And is there anything that you have seen as you work very hard to get the word out there and work very hard to help credit unions understand that this is a way for them to help their members while helping sustain the credit union industry moving forward? Are you seeing more traction now, maybe as a result of some of the things that are going on that we've talked about? And is that kind of encouraging in terms of how we get some of the retiring members to keep their wealth within the credit unions?
Yeah, I mean, I think a couple things that jump out to me, Melissa, when I think about, our conversations with credit unions. I think in the very beginning, a lot of folks just associated retirement with wealth management. And there was almost two responses. For credit unions that didn't have a wealth management team, it was like, well, we can't serve members. And for those that did, it was almost like that box has been checked. And I think it was really surprising for us every time we met with a credit union that had a wealth management team, we realized that they were serving, 2 to 3% of the members. And so there was this realization that it's a valuable service, but it's not serving everyone, and everyone has this problem. There was also this realization that, particularly when you think about Social Security and Medicare, that is not what financial advisors are paid to do. They're paid to manage money. They're paid to do some financial planning. And so members need a set of services that they actually can't get from financial advisors. The second thing I think that we've seen is that we all recognize that for most of you on this phone, one of your core strategic goals is actually to bring in younger members. And so there was almost in the early days, I think we have these members, they're good, it'll all be fine, but what we really need is younger members. I think what we've gone through from like a rates and liquidity perspective over the last couple of years has reminded all of us of how important this demographic is. You need these depositors to fund your loans, right? And if we don't serve them and continue to serve them, those deposits are going to go somewhere else. And I think what we have seen is that the more sophisticated credit unions who really want to make sure that they control their deposit base are realizing that actually they're only still capturing a small percentage of that wallet. Today, the credit unions we work with are only capturing 25% of their members' direct deposit for Social Security. That's not that 75% is coming in as paper checks. It means that 75% is going to the bank down the road or going to Charles Schwab or somewhere else. And so what we have seen is that credit unions have said, look, we can walk and chew gum at the same time. We can work on serving younger members, but we've got to retain and deepen our relationships with these older members, and we can't take them for granted because everyone else wants them as a customer. And I think that's, again, been this like realization of like, we really need these members, and they actually have more money than we realized. We need to get that money over to the credit union.
Yeah, and I think along those lines, when you talk about, well, it doesn't have to be an either or. Do we attract and retain our aging populations, or do we look to attract and acquire the younger populations? And
Yep.
you could argue it's you will not have the resources to go after and attract the younger generations with the technologies and the offerings and the programs if you do not have the deposits and the liquidity that you need that has to come from this aging demographic. And I think it's also relevant to point out the difference in just deposit volume now. So the older generations, that's where the wealth is. And that wealth is going to go somewhere. And if that wealth goes to, does not start within a credit union system, there's a slim chance that that's going to come into the credit union system with that younger generation. So it's just interesting. I think the more this comes up, and then throw on top the overwhelming complicated nature of even the simple question of when do I collect? What age should I collect? How should I do that? It's I can say firsthand that financial advisors do not answer that question very well. So I think that's an interesting point, and it's a great opportunity for credit unions to step in, leverage tools like this to really be able to help their members answer some of those tough questions and make some of those, life decisions.
Yeah, and one thing I just wanted to add to that, Melissa, is, credit unions are in a very unique position. If you think about the average age of a credit union member being 54, I think a lot of times we assume that we're in a great position. Oh, I'm hearing a little bit of echo, Rhian. Thank you. We're in a great position to be serving those members because that is our average age, but that doesn't necessarily mean we're completely aligning and meeting their needs fully. To your point, financial advisors are not the experts in Social Security. And the Social Security office isn't actually supposed to give advice about Social Security, which is also fascinating. So there's this gap, I think, just overall in the space of where do they go for that retirement advice that everybody needs. And we know that it's not realistic for a credit union to hire an expert on the Social Security side necessarily, or an expert on the Medicare side. And knowing that this member group of 50 to 70 is very comfortable with navigating digital, as Rhian touched on, they research online and they do want to buy offline or talk to someone at a certain point or have that personalized experience. But we can leverage technology to be able to provide that personalized experience for them in a way that they're comfortable with. And the design is really intentional around that. For example, the blogs, that is a great channel. For those members, when they're thinking about financial education and more serious matters, they do want to read. So that is the correct way to deliver the information. If it's videos, it's likely going to be about hobbies, fishing, gardening, that type of thing. But for more serious matters, they do want to be able to read it. But the key is helping to really hone in on that member's specific journey so they aren't having to dig around through a ton of information that isn't relevant to them.
Great. Very, very informative. And as I, again, led with a great opportunity, I think, for credit unions. So again, we think we have another couple minutes. If there are any questions, feel free to throw them in the chat, or you can unmute yourself and ask the question. But if none more come in, Rhian and Stef, I just want to thank you both for joining this webinar. Oh, looks like this question has just come in. Stef, I'll let you handle that one if you'd like. Is there a demo you can share of what our members would use?
Absolutely. Sorry, I'm not seeing all the questions, Melissa, so let me catch that. But absolutely, we'd be happy to dive into what that member experience would look like. So if you want to reach out, my email here, or if I can get your name, I'll be sure to reach out and we can schedule some time to go through that together.
Great. And Christine, I will definitely make sure you get this information, and then you could get that demo.
Perfect.
And
And Shane,
I didn't plant that question or incentivize anyone to ask that. So that one's just a freebie there.
thank you. I love it. Just so you know, for everyone on the line too, we will be at GAC next week. I cannot believe it's just around the corner. So of course we can happy to chat before then. But if you will be there, we're booth 1116. I'll put that in the chat. So feel free to swing by, or again, my contact information is in the chat if you'd like to schedule some time to get together. We can dive into the demo and deeper discussions there as well.
Excellent. And I know that our team will for sure be sending out the recording of this, and we also will be able to put you in touch with Silvur at any point. So do not hesitate to reach out to any of us. We've, as I mentioned, been working with Silvur for a few years now and are just very excited at the traction that has happened in those 2 years, and really hoping that some of our credit unions are looking to engage a little bit further. So.
Melissa, can I maybe just add with, or just
Yeah,
end with
absolutely.
like one PSA, which is just last night, Social Security announced that the payments under the Social Security Fairness Act are going to start in March. Maybe just the quick TLDR here is that historically, your members that were teachers or public servants did not get full access to Social Security. And now, after the passage of the Social Security Act, they will get full access. The percentage of members that are impacted in every state varies. I would say the state that in the CCUA that has the highest impact is the state of Massachusetts. All the teachers are impacted. What I would just say, the short story here is that every teacher in the state of Massachusetts is now eligible for spousal benefits, and they may be receiving a $15,000 to $20,000 deposit next month. They will also be receiving for the first time direct deposit of Social Security. This is a huge opportunity. I'm going to just attach into the webinar just a little one-pager. Actually, it's a two-pager on the Social Security Fairness Act. And if folks want to learn more about the impact in their state, Stef can provide you more information, because we have the data state by state on whether or not your teachers are impacted, and then also what percentage of public servants are impacted. But this is huge. There'll be members who have never had direct deposit for Social Security starting it for the first time, and like a huge opportunity again to get out in front of everyone. There's been a lot of confusion about this space up until like yesterday. Social Security was communicating that payments wouldn't be made until the end of the year, and now all of a sudden payments are going to start next month. So again, a great opportunity to be serving members in this moment where they're going to feel, I think, pretty excited about finally being able to access these benefits. And we're happy to spend time with anyone on the phone, just walking you through the numbers and helping you understand what the impact could be for your credit union.
That's great. And Rhian, I think it's probably safe to say that some of those members that are going to be, or some of those individuals that are going to be recipients are likely already members of some of our credit unions. So
Absolutely.
that kind of, I think, underscores that opportunity and makes it personal. So great point. And I think that is good to end with. So Stef or Rhian, anything final you would like to point out to our attendees here? Anything else you'd like to bring up?
No, I guess I would just say thank you to Melissa. Melissa has been an early advocate for Silvur. I remember meeting you first at NACUSO and Venture Tech a couple of years ago. So we appreciate your championship of Silvur, and in particular championing the members that we serve. So thank you.
Absolutely. Happy to do it. Thank you everyone for joining and for supporting the CCUA and Webinar Wednesdays. And Rhian and Stef, thanks again for your information and for the discussion. Thank you very much, everyone. And again, there will be follow-up with content from this Webinar Wednesday as well as a recording.
Thank you so much. Appreciate you, Melissa. Have a great day, everybody.
Bye.